Hello, Robert Harris, your lender for life, and in today's short video I'm going to be discussing a manually underwritten mortgage and how it can help your buyers get qualified to purchase the home of their dreams. Now, for the last 4 years I've been working very aggressively with this manually underwritten loan, and I've helped over 260 buyers qualify to buy a home. Many of these buyers were turned down from other banks and lending institutions. The reason being is that not everyone works with a manually underwritten loan. Now, out of all those buyers who've been turned down by other bankers, I tallied up many of the reasons as to why they were being turned down, and I wanted to share those with you. Number one would be credit score. Not all banks are created equal. Some stop at a 640, some at a 620. We go down to a 580 credit score for your FHA buyers who require a 3.5% down payment. We can go down to a 550 credit score for your VA buyers, 100% financing. Late payments, collections, and charge-offs within the last 12 months. As long as we can show it was an isolated incident and document the reason as to why it occurred, this is something that easily we can overcome. Debt-to-income ratio. A manually underwritten mortgage is going to allow for a higher debt-to-income ratio, which would therefore help your buyer to qualify for a higher purchase price if they so choose. Lates after bankruptcy. Well, after a bankruptcy and now you're having late payments again, that's a big no-no, and the lender is not going to want to see that. But if we can show that it was an isolated incident and document the reason as to why it happened, we should be able to overcome that without any problem. Payment shock. The example I think of is somebody who's renting for $900 a month. They're about to buy a home. The new mortgage is going to be $1,600 a month. As long as we can show 1 month of reserves in the bank account, so for this example, $1,600 in the bank at the time of closing, we'd have no issue with this and we'd be able to get that buyer closed. Trade lines. Many times, a lender or a bank is going to require at least 3 trade lines on credit. We can actually work with trade lines that are off of credit, such as your rental history, cell phone bill, car insurance, or any of your utilities. As long as we can show that those have been paid the last 12 months and on time, we can count that as trade line. NSFs and overdrafts. NSFs, not a good thing because you've now overdrafted your account. You spent more money than what you actually have in your account. So not a good thing, but again, if we can document it and show it as an isolated incident, something that we can easily overcome. Overdrafts, similar to an NSF, but not as severe because you're just basically taking your savings and now covering your checking with the additional funds you had in savings. My name is Robert Harris, and I hope you found this information useful, but more importantly, I hope you're able to share this information with the buyer who will now qualify for their home.